And I'm really excited to talk about this topic with you guys today because for a long time and for many years in research, this seemed like something that we really only discussed in a really academic context. You know, we talked about the properties of money, we talked about possibilities of how that could be expanded in a digital environment. But it really took the advent of some new technologies, the emergence of some private players, and then as of late, the pandemic, to really get central bankers to stop seeing this as such an academic question and really start exploring what the future of money could look like. And so I'm very enthusiastic to be able to actually share some of the research I've been working on CBDC with you guys today. And we can kind of continue that conversation about what exactly a CBDC can and cannot do. So, brief overview. First thing we'll discuss, what is the CBDC that I keep speaking about? We'll go through some of the motivations. We'll go through some of the foundational principles. And we'll then focus on two of the motivations that I've expressly done some research on. The first is a paper that I co-authored with someone at the board, Paul Wong. The paper is titled Comparing Means of Payment, What Role for Central Bank Digital Currency? And the second was a PSR briefing at our own Kansas City Fed's publication. And that one looks more at financial inclusion and is called Crafting a Central Bank Digital Currency to Reach All Americans. And finally, I'll conclude with some very high-level overviews of what is the Federal Reserve doing. For any of you who thought there would be some big announcement with today's webinar, feel free to quit right now. There won't be. This really is just, hopefully will provide you all with the information that you need to understand what CBDC is, some of the research that is being conducted surrounding it, and then a very nice overview as to what your central bank is doing. So what is a CBDC? A CBDC can be defined as a digital payment instrument denominated in the national unit of account. For us, that would be dollars. That is a direct liability of a central bank. Now, I know many of us like to make payments digitally all the time. And so how would something like this differ from the payments that I transact with on my Amex on a daily basis? Well, first, those are, as many of you know, would be in commercial bank money and not something that you'd be seeing in central bank money, even though they are digital. You then have the option, though, as someone, sorry, my computer, of course, is wigging out at the worst possible time. Okay, sorry about that. You then have the option as someone who's an individual to be using a central bank liability, and that would be through cash. And so if you want to pay with something in a tangible respect and physically hand over your money, you have the option to do that as an individual with a central bank liability. There is a second central bank liability that is currently offered. That is the form of reserves. Those are digital. However, those are not offered to the average consumer. And so if you are a financial institution, which none of you are, you're all individual people, you would be able to access that central bank liability, but as a human being trying to make a payment online, probably not so much. And so what does a CBDC do? It takes the attribute of being able to have an individual use a central bank liability such as cash, but it moves it into a digital environment like we have with reserves. And that is the gap that a CBDC is trying to fill that most payment systems don't currently have. So why are central banks exploring CBDC? There are a variety of motivations that have arisen over the past few years. One of the most prominent ones you might hear about is the potential decline in cash. Now, this was the impetus for the Riksbank, which is Sweden's central bank, to be looking at their e-krona, because over the past few years, Sweden has had a big decline in cash. And there's always this concern when there's a decline in cash that those who might be the most vulnerable will not be able to access a safe, efficient payment system. And so there is some thought behind that, that a central bank might have this obligation to be able to provide those populations with the safe, efficient instrument. And so a CBDC might be able to do so. I just want to note, in the United States, we do not have that same kind of concern about the decline in cash, but that doesn't mean other advanced economies are not looking at it. Similar to concerns surrounding declining cash, our central banks are exploring CBDC for potential financial inclusion reasons. Starting with the idea that, okay, as payments are becoming more digital, there's this idea that there's a sector of the population that might not be able to make those digital payments because they're not included in the banking system. And so as payments are moving away from a cash-based society, in theory, should we be concerned with assuming those people would be able to make payments going forward? Payments efficiency and resiliency. There is a concern with digital payments being so heavily dominated by the private sector that the public sector might have to get involved for resiliency purposes and also in order to promote competition. Regarding efficiency, there are ideas that a central bank digital currency might be able to allow us to send money as seamlessly as one can send an email. A note on that, some of the early experiments done by central banks have found there has not been material benefits in efficiency because, quite frankly, in advanced economies, we often do have systems that are rather efficient, that are moving money pretty quickly, that are secure and reliable. And so you might not be getting such a material benefit going to a CBDC if you're an advanced economy. However, in emerging market economies that might have a weak banking sector, there are ideas that a CBDC might be able to have these really large and material improvements. CBDCs are being explored for privacy reasons. The great irony behind digital transactions is that they leave a paper trail. And so there are concerns that as everything has been going online, you no longer have the ability to anonymously transact. Quite frankly, I'll be honest, as a central bank, you probably will never be able to do that in a digital environment, given our anti-money laundering rules. But there's the idea that there's possibility of having some payment instrument that allows you to be able to transact more anonymously than you might be able to now. On the flip side, there are some concerns that privacy would also allow the opposite side of the coin with a digital cash with surveillance features. And so should you have a hostile nation that wanted to monitor its citizens, that is also possible. As a central banker, that makes me very uncomfortable. And I don't think that is the case in the United States, but it is something that you will read about if you read about CBDC. And therefore, we do actually have to mention it, even though it is a strange thing to throw in a central bank presentation. There are monetary policy potential improvements. There's the idea that transmission would be able to occur more efficiently with a CBDC. And there also is the potential for negative interest rates to happen more easily if that were something that a central bank would desire as a policy tool. And finally, many countries are looking at CBDC in order to protect monetary sovereignty against possible private digital currencies and possibly other central bank digital currencies that they fear may impede their mandate and their missions for monetary policy and financial stability. And so while central banks have different motivations for considering CBDC, it is important to note that these are just a list of the motivations and that enacting a CBDC does not necessarily get you all of these features. Design matters. And so improvements in foreign financial inclusion might not be improving monetary policy. It's important to note that central banks are not doing this research and not having these conversations in isolation. There's been quite a bit of coordination on the international front. There was a paper that came out in October that was joint work with the BIS and 7 other central banks. It was the Federal Reserve, it was the Bank of Canada, it was the Bank of England, the Bank of Japan, the ECB, the Risk Bank, and the Swiss National Bank. And they, although all these countries have different motivations, they came together to have this foundational paper, which also included these 3 foundational principles that they think are necessary for any CBDC issuance because they derive from the common objectives of a central bank. The first is do no harm. That would mean a central bank digital currency would not impede the mandate of central banks to be able to do monetary policy and keep financial stability. Then there is coexistence. This would be a central bank digital currency. It should exist with cash and other private money like commercial bank money. This is not a substitute, this is a complement. And finally, the third is innovation efficiency. Any central bank initiative really should be considering innovation and not be just leaving that to private sector money. And so despite all of the different motivations that central banks may be looking at a CBDC to solve certain problems that are very jurisdictionally related to their environment, these 6 central banks, 7 central banks, the BIS, came to the conclusion that these are 3 principles that should be universal. And now for the fun part, my own research. As I previously mentioned, this was joint work with Paul Wong, and something we were really interested in was looking at what a CBDC could do that other means of payment cannot. And it goes back to that earlier question of to a consumer, to any entity that might be using a CBDC, how is this different than what's already available? And so we wanted to do a comparison of CBDC against other central bank products. In this case, we looked at cash. We looked at RTGS systems, and then we looked at what we called RTGS plus systems, which would be real-time gross settlement systems plus things that we thought could be added to them within the confines of how they already exist. And so we looked at these different payment systems across 7 different attributes. So we looked at accessibility. So if somebody wanted to be able to use any of these, how closely related could they? Was it something they would need an account for? Is it something that they would just get as a bearer instrument? And so we ranked those scores using some of the FDIC data. Anonymity, how anonymous could this payment mechanism be? Bearer instrument, that is the ability, if you have the instrument, you own the liability. And so the best example of that is cash. If you're holding the cash, it's yours. There's not a ledger somewhere that's going to let you know really as an individual who owns how much cash. Holding the cash is all you need for the transaction. Independence, this talks about whether you need any other sort of intermediaries or whether you need any sort of electronic equipment in order to actually do the transaction. Operational efficiency, we looked at cost. Programmability, whether or not these can be programmed. And finally, service availability, how is this offered? And some of these variables we looked at from the perspective of we could actually put actual numerical values to them. And some of them really just were ordinal. And it was, okay, this is, this is more than that for these reasons. And our paper does include them in the appendix. I will absolutely not bore you with them right now. So as you can see, a central bank digital currency at its maximum potential can improve on many things with RTGS and can somewhat improve on cash but not be able to meet all of the attributes of cash. And so the central bank digital currency will not be as anonymous and will not be as independent as cash would be, in large part because the anonymity side of it, we're going to have some sort of anti-money laundering and BSA compliance. And then on the independent side, you will need some sort of electronic device in order to execute the transaction, as opposed to cash where someone can just hand you a tangible piece of paper. On the other side, though, of the graph, you can definitely see that for programmability and operational efficiency, it's quite possible that something like a CBDC would have improvements over our existing digital payment systems. But then we took this a step further and we realized that as we saw the maximum potential, that wouldn't be the case for every design choice. And so the design of CBDC matters. All of them are not the same. They can focus on different things. And so what we did in the paper is we then went through 3 potential designs. The first is a cash equivalent CBDC. This is a CBDC that is designed to be a bearer instrument, meaning that there's, holding it is all you really need. And so that would be the closest to the world of a digital cash that you can picture. So the idea of I'm just going to send this transaction and settlement occurs simply by sending it, that would be your cash equivalent CBDC. An account-based CBDC would be equivalent to many people having an account at the central bank. We looked at it through the lens of possibly through a new technology, but for account-based CBDCs, you don't actually need that. And then finally, a hybrid CBDC where the central bank issues the new liability. However, private sector takes care of some of the payment services and the actual onboarding. And so going through these charts, it starts to show that a CBDC is not universally going to improve many things. It depends on design. And so, for example, the cash equivalent CBDC is an improvement over your RTGS systems in terms of accessibility, anonymity, bearer instrument independence, but actually might not be as operational efficient, might not be as programmable. So there are some trade-offs there. The account-based CBDC, you lose a little bit of the anonymity that you might have with the cash equivalent CBDC. You obviously lose the ability to be a bearer instrument. But on the flip side of that, you have the ability to be more possibly programmable and cost efficient than RTGS systems. And finally, a hybrid is kind of a mix of those two. You lose a lot of the improvements that you would get closer to cash from an RTGS system, but at the same time, you would be able to possibly have greater programmability and operational efficiency. And so what we got from this paper is, as payments has been listed as a motivation, it is possible the CBDC could provide this new central bank liability that is accessible by more than just financial institutions in a digital manner. There is a place for it. There's a possibility that it can be an improvement, but design absolutely will matter, and how that is executed will be really important. Okay, and for the second paper, crafting a central bank digital currency to reach all Americans. So this idea really came into play right around the EIP payments. So as many of you know, there was a bit of delay last year in trying to get these payments out because many people did not have an account at all or account on file with the IRS. And so questions begin to arise whether or not a CBDC account would have been able to make emergency payments better in that kind of situation. And so this led to the beginning of the question of, if you were to use CBDC to address financial inclusion, how would you do it? So the first thing is you would need to provide access to a transactional account. And that allowed us to look at the FDIC data that looks at underbanked. And so just for background, 5.4% of US households do not have a checking or savings account, or they're thus considered unbanked. And so the question became, okay, what attributes does this population have that would allow us as a central bank to be able to issue a CBDC that might be able to attract them into this payment system? It's important to note, though, that this population is also less likely to be digitally included as those who are banked. And for a central bank digital currency, that is very important. So there are 33.8% of unbanked households have some internet access compared with 82.6% of banked households. Smartphone ownership among the unbanked is only 63.7% compared with 86.6% of banked households. And unbanked households are nearly twice as likely as banked households to have to cancel cell phone service due to cost. And so the idea behind all of this is, as we're considering a CBDC, and if we're trying to reach this vulnerable population, there might have to be more to do than just create a digital something for them, because they might not be able to access it. In addition to the digital divide, the FDIC provides the main reasons for not having a bank account among the unbanked. As you can see, far and away, the number one reason is the minimum balance requirements. Other requirements regarding costs are fees are too high and fees are too unpredictable. The second reason, do not trust banks, is notable because that is its own option as a main reason. It's not that they don't trust banks because of these other reasons listed. It does not mean they do not trust banks because of other reasons. It means at the end of the day, the number two main reason is that they do not trust banks. And so if you're trying to consider how do we get them banked, there might need to be some sort of other options available besides offering transaction accounts at financial institutions. Something that also should be mentioned, and it's not part of the main reasons, but the unbanked are twice as likely to receive cash as payment as the banked are. And moreover, they also, I want to say about 75% of the unbanked actually do not have any desire to get a bank account. And so this is not a population that inherently will, if you build it, they will come. So it is quite possible that a CBDC really would have to have design features that are narrowly tailored towards the unbanked, as opposed to just creating and hoping that it will solve some of the problems. So what are some of these, how could some of these needs be addressed? First, CBDC designed for the unbanked should have no minimum balance requirements. That's kind of obvious given that is the number one reason why the unbanked are unbanked. Consumers should be able to access CBDC and transact with it anytime, anywhere, and for little to no cost. This is important because there are concerns that sometimes the unbanked have problems with some of the timing and some of the locations available. As you saw on the previous chart, those weren't the top reasons, but they were there. And so anytime, anywhere would help that feature of why people are unbanked. And for little to no cost also gets at some of the cost concerns. It should be noted that as we envision services being built upon a CBDC, it's quite possible that the private sector will put transaction fees on their services, in large part because, revenue is how you have a business. So there should be, at the minimum, a CBDC baseline that is at little to no cost. So it's not suggesting that any CBDC could be free. That would be nice. This just suggests that there needs to be a bare minimum somewhere, somehow, that there's a little to no cost CBDC for those who really are currently unbanked. The third reason is CBDC will have to balance transaction privacy for consumers while still complying with the Bank Secrecy Act and anti-money laundering regulation. As mentioned earlier, there are many of those who believe that privacy is something they would like to have in a digital world. While it was not as high on the main reasons, it actually was the third reason overall while consumers were unbanked. So it seems to suggest that there is some demand from the unbanked to have a product that would be somewhat private. And it's also important when you start thinking about the ways in which businesses might be trying to generate revenue. If you can't charge a certain sector fees, you might be inclined to try to sell their data. And so for those who are naturally skeptical and value privacy, to make sure that there's some sort of privacy involved for a CBDC might be important if their fear is that whatever they are using will ultimately sell their data. That is not to suggest that everything will be owned by a central bank. This would be more about any business that chooses to build upon it. So endpoint access for a CBDC will have to entail more than digital wallet via a smartphone app or web page. This goes back to the digital divide. And there are many people who can't access a web page at home or do not have a smartphone. There needs to be a place in which a consumer would be able to go and transact. This does tie into some of the suggestions about postal banking. In the paper, we don't make those kind of suggestions. We just highlight the point that it needs to be more than an app. And as I say that, there has been legislation that has only suggested an app, so for financial inclusion reasons. So it needs to be reiterated and hammered home sometimes. The next point is CBDC should be a par with cash, and cash should be able to be converted into CBDC at little to no cost to the consumer. This makes sense given that those who are unbanked receive cash more often than those who are banked as a salary. And so if you're receiving your money in cash, we want to make sure there are not going to be alternative financial services that are going to then take your hard, tangible cash and get, converting it into CBDC in a predatory way. So there's an idea that this should be something that should be converted in little to no cost. And finally, financial institutions cannot be the only entity to support a CBDC. This goes back to the fact that there are many unbanked people who genuinely just don't trust banks, and more importantly, really just don't want a bank account. And if those are the same population that are looking towards a CBDC, it's problematic if the only institutions that are offering it are the same institutions they're trying to avoid. So what is the Federal Reserve doing? As I mentioned earlier, there's no fun announcement coming from me today, but we are experimenting, we're engaging, we're collaborating with other central banks, and we are researching. On the experimentation side, there are two projects that you may have heard of from Governor Brainerd. The first is the Federal Reserve Board's Technology Lab. The Tech Lab has been doing a lot of work looking at distributed ledger technology. Their first paper looking on their FooWire project came out last year, and that looked at Hyperledger Fabric, and they were doing some tests with that. The second project you may have heard of is the Federal Reserve Boston's research effort with MIT. That is looking at a hypothetical CBDC and seeing how it could match certain metrics in terms of resiliency, speed, and scalability. The Federal Reserve is engaging. Quite often, the Federal Reserve members are meeting with the private sector and are meeting with other constituents to hear about either their ideas of how a CBDC could be designed or what they would use a CBDC for. Collaborating with other central banks. I had mentioned earlier, there was the group of 7 central banks, the BIS. That work is continuing. And so for those who like central bank white papers, do not worry. I'm sure there are many more to come. And there are also a lot of other international efforts, either from the BIS and the CPMI or even the Financial Stability Board, that have been looking at concerns regarding CBDC. And finally, researching. You guys got a little flavor of that today with my presentation. And so we have a lot of questions about central bank digital currency, how this new central bank liability will play out in the financial system, some of the risks, some of the benefits, why people would want it. And so a lot more to come and a lot more fun questions for me to answer. I now look forward to answering some of yours.
Thanks, Jesse. We do have quite a few questions that have come through. So the first question is, what does CBDC mean for community banking institutions?
Well, a lot of this could be dependent on design. When I say we're in some of the preliminary questions, I really do mean that we are asking some of the very broad questions, and disintermediation of banks is one of the risks that we are very concerned about. And so that is very much on our radar. It is not something that we have all the answers for right now. And so a CBDC, depending on its design, could have a bunch of different implications for community banks. But I promise you, as we're going through this research, and that is definitely something on our research agenda and is something that we will absolutely be sharing as we go through it.
Do you see CBDC adopting another, digital currency, something that already exists, or essentially creating its own?
Well, as a central bank liability, by definition, I'm pretty sure that it will still come from a central bank. So that would still be, unless something really drastic happens, would be issued by the Federal Reserve. So if the question is whether the central bank would be adopting a private currency, that kind of defeats the point of the CBDC. However, if you're asking whether the central bank will be looking towards other products for their design, I don't know. Given that the Federal Reserve has not decided to issue a CBDC, and given all of the design considerations that have gone into something like FedNow, I can only imagine there would be similar explorations going through that kind of process should the Federal Reserve make a decision to issue a CBDC, which I'm sure I'm going to say far too many times for your liking that has not been made yet.
Thank you. How did you account for safety and security in the comparison model that you shared in your presentation?
So that was actually not one of the factors exactly. It was something that we considered a little bit in operational efficiency. But there were questions. We were trying to just pick 7 attributes that were clear, and really it was a preliminary analysis as to how this can be an improvement. There are many other things that we could have included, that safety being one of them. We then would have to define safety, which is, you can imagine, a whole different set of issues. So we think that might not have been so much a apples for apples comparison, but there's definitely work being done looking at how CBDC could be designed for safety reasons and whether or not this could be more secure. I can imagine that a lot. I feel like I'm going to disappoint many of you with these questions because so many of them are design dependent, but just to elaborate a little bit. So imagine a world where the Federal Reserve would create a CBDC tomorrow. Well, we already have infrastructure for it. So imagine if we just opened up our accounts to everybody get an account of the Federal Reserve System and be able to transact using our existing services. And so to do that, your safety and security would be somewhat similar to what existing payment products are, because that's how they look. All of a sudden, if you want to design a CBDC on a new technology that you think will be able to improve your resiliency and security, I mean, that's very different design feature. And so that is possible. That could be a yes or a no, depending on how what technology you use, what the knowns and unknowns are. And that's one of the reasons that the Federal Reserve Bank of Boston is doing their experiment with MIT, because security is something that is very much on their radar. And so if they're trying to see whether or not they can develop a hypothetical that is as secure as they would like it to be. And so hopefully that will be able to answer some of the technology side of what security would look like. Unfortunately, I'm not a technologist, so I can't give you a lot of the nuts and bolts behind that.
That's okay. I appreciate it and recognize that we're still in exploring what that could look like. I have seen quite a few questions come through as far as time frame. I didn't know if that was something you could address.
There is no time frame on this. I know other central banks have mentioned quite a bit what they're looking to do. I know there have been mentions as to when this could come out. I also know that many of those central bankers, as they've made their announcements, have changed their announcements the more they've started to actually look at a CBDC. And so I can't even tell you a time frame because there's been no decision whether or not to issue. And there's been no decision of when to even know the point at which to make the decision of when to issue. And so I really hoped in the beginning when I said that you're not getting an announcement from me that this covered it. And I do understand the disappointment, because if I was in your shoes, I am the most boring person to answer any of your questions right now. And it's not because I'm withholding information. It's because that decisions just haven't been made yet. So it's been said quite a bit by Chair Powell, and it's been reiterated quite a bit through the system that, it's better to be right than be first. And so as we're really thinking about it, as we're seeing what other central banks are doing, it's important that the Federal Reserve, as the currency, as the dollar is so central to global financial systems, really is taking this as seriously as it could be. And so to put a date on anything would really be premature, in my opinion.
That's fair. Thank you for addressing that. Regarding,
I would not have a job tomorrow.
well, we would like you to keep your job, so thank you. Regarding the impacts to unbanked and the underbanked, has there been any collaboration with minority banks on how to approach CBDC?
Not to my knowledge, but when I say we're in the initial exploring phase, the conversations are usually so high level that it's, what generic use cases could be achieved through a CBDC. And so I think the expectation is at once we get some of our very high level questions answered, there'll be more narrowly tailored engagement at some point. I know personally from my research perspective, and obviously these views are my own and not of the Federal Reserve, through my own exploration of what a CBDC could be doing for the unbanked and the underserved, I would love to be hearing from the people with their boots on the ground to explain to what they're seeing and how they believe this could be designed to impact. I only know what data tells me at times, and so any sort of evidence that can be corroborating that data would be fantastic. As for the underserved, that's a different question than the unbanked. It is quite interesting in that there are many, you hear the statistic that around 25% of Americans are underserved, and that's a lot larger than the stat of who is unbanked. And so there are questions as to what services would a CBDC have to offer to keep people from becoming underserved, or are we defining them as underserved because we stopped asking the right questions? And so that's a whole strain of academic literature that I think has been reevaluated in the past few years, and will probably continue to be reevaluated. But it's definitely something on our mind and something to consider. And if you're a minority banker and want to tell me things, I would love to hear from you.
Great, thank you. Do you have a sense for how CBDC could potentially boost consumer spending power and create an upward pressure on the general price level?
That is something outside of what the macroeconomists feel comfortable in me answering. So it's not in my research. So I personally do not know of anybody who's doing that kind of work. Right now, I mean this, and I'm going to be a broken record, we really are just starting to look at what can this do? And then once we start with some of those questions, get into some of the implication questions as to, okay, what is this going to do with, in context of the actual economy, in context of the financial system, in terms of global trade? And those are questions that will come later. And as I said, the exploration of this is probably going to be lengthier than many people would like, but we really do have to have some of these answers prior to jumping to some of the more fun questions.
You did mention the possibility of negative rates with CBDC, though. Do you know how that could potentially work?
I mean, the idea is you'd be able to, a CBDC, if there was an interest-bearing CBDC, the Federal Reserve would have the ability to actually change the rate in the CBDC that's programmable. And so that's a tech design. It's possible. There's absolutely no indication that any of that would be a policy choice. So something that, as we're considering central bank digital currency from a research side, we have questions about what can the technology do. We then have our buckets as to what are design choices, and then we have our buckets as to what are policy questions. And so some of these are far removed from some of the questions that we first need to see, like, would it be feasible to program a CBDC to be able to change interest rates? Should we choose to have an interest-bearing CBDC, which is a policy question that we have not answered yet. And so there's a lot of more questions than answers right now.
Well, maybe I can give you a question you can't answer. Can you explain again what RTG stands for?
Oh, real-time gross settlement system. Sorry, I breezed right through that. That was my mistake. I've learned over the years that sometimes lingering too long on charts that you think are really cool, the audience might not feel the same way. And so I wanted to give you guys a high-level overview of the really pretty charts and not make you linger on them too long. So apologies for not going through that thoroughly.
It's okay. I appreciate the explanation. To what extent do you believe private or publicly traded corporations will play in the development of CBDCs? I know we still would have to solicit information from everyone that potentially could be using this, but do you have any thoughts as to what that role could look like?
I do think there's a certain degree, there always are talks of public-private partnerships. You go to any central bank digital currency or any payments conference, that is usually some of the rhetoric you will hear consistently. And I would not be surprised if that was also something that you'd be hearing from regarding CBDC in the United States. So I can't imagine that any decisions would any information would be achieved entirely in isolation. Is the question whether this would look like something similar to how other payment systems have been developed here over the past few years, specifically something like FedNow. I don't know. The level of engagement is something that is usually decided by the board, and how they want to engage is also usually up to them.
Okay, thank you. And I'm going through some of the questions, just double checking what we may have answered already. I have seen in the questions a lot of conversation about what's happening in various states. I saw something about payday lending. Do you know how this has impacted the work of CBDC and how things continue to move forward?
I do think that some of what's going on in the states and just what's going on in the payments climate in general does impact the interest in CBDC. As I started the presentation, one of the drivers, or a couple of the drivers that have really sped up some of this interest outside of just sheer academic inquiry was the pandemic. The idea that, okay, we're really not supposed to be touching things. Cash might be dirty. What about payment systems? How can we improve that? So that was one of the drivers from the payments climate that kind of it seems to have accelerated some of the discussions on CBDC. In my opinion, these were kind of already happening anyway. They've just been a little more, I think, public facing. So it's not so much that these were not conversations that have been going on for a while, but I think the expectation around certain private company and state developments has actually led to a little bit more of a vocal Federal Reserve. And I'm sure many of you are rolling your eyes as I say that, because I'm basically trying to deflect almost all of your fun questions.
It's hard to answer everyone's questions when this is so new and just still in the exploratory stages. So,
and I'm not making the decisions. If somebody wants to give me the power to decide whether or not to issue a CBDC, I will have all of your answers. But until such a time, I have to tell you what I know.
Well, I'll leave you with one last question then. Is there any concern that another country will issue a CBDC before the US?
Well, that ship has already sailed. So there actually is a CBDC out of the Bahamas. And so I guess that is no longer a huge concern, but quite frankly, it was never a big concern in our opinion. As I mentioned previously, Chair Powell has said it best: it's better to be right than to be first. The dollar is so important in the global financial system, and so that we need to make sure that any implications, including the many that you guys have brought up today, need to really be thoroughly understood and addressed prior to upending that. And so it's really important that if the Federal Reserve chooses to issue a CBDC, which it may or may not, that it gets it right when it does.
I think that's very important. When we're there, make sure we do it right.
If we're there.
True.
You can't announce that we're doing this. That was the beginning.
If we get there, we do it correctly.
Exactly.
Well, Jesse, I want to thank you for your time today, for sharing your research and answering as many questions as you could.